Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I thought I would put out a quick video talking to new investors who have zero experience on the stock market. This comes in response to a few different inquiries, new viewers on the channel, new investors inquiring about what type of stocks to buy, what type of investment strategy to employ, knowing that they have zero experience on the stock market and really have no idea what they're doing. So I thought I'd just put out a quick video talking to this type of investor, new viewers on the channel, to kind of give you some advice starting off what I would be doing with zero experience on the stock market. The first thing I would point out before even starting that discussion is that the stock market is inherently risky. There is a very real chance that you can lose all of your money. Robinhood is not a safe application, if you will. You should think of Robinhood as a very risky application, and you need to be essentially employing best practices, staying disciplined. You should be managing risk, avoiding losses at all times. You really can't let your guard down with regards to investing on any application, especially Robinhood, because you really have free reign of all the stock market. There's really no investor advising you. There's no pre-planned stocks to buy. For example, Stash Invest I think is a great application for new investors because the options are very limited, and the options they give you are more or less safe options. On Robinhood here, you can literally buy any stock on the stock market regardless of risk. So I think there's a little bit of a danger with new investors with zero experience on the stock market investing with Robinhood. If you've had some experience before, if you know kind of how the market works, what to look for, what a quality stock is, I don't think you'll have any problems on Robinhood. But I'm talking to the new investor who has zero experience on Robinhood. What should they be doing, at least to start off and start learning about the markets? So, again, I just want to emphasize that point. The stock market is inherently risky. And to kind of go along with that, you should never invest more than you're willing to lose. So you should basically think about Robinhood as a very risky entity that if you woke up in the morning and your Robinhood balance was zero, you would have no problems with that with regards to living. You might have some regret, not saying that, but you will not have any problems, for example, affording rent, buying groceries, living expenses, so on and so forth. You should not be putting any more money into the stock market than you're willing to lose overnight. So I always kind of imagine that if I woke up, a Robinhood portfolio was zero, would I be able to survive if I lost all that money? That's really how you should be thinking about the markets. They're very risky, and never invest more money than you're willing to lose. After having kind of come to terms with that and understand that it's a very risky environment, the next thing should be evaluating different stocks. If I scroll through my portfolio here, you can see a lot of different ticker symbols on the left there, and the majority of my stocks are what are considered blue chip stocks. These are companies that are very, very large companies, valued in the billions of dollars. These are household name companies, and these are companies that are leaders in their particular market industries. These are typically safer than what other investors at the other end of the spectrum would consider are penny stocks. These are very low price stocks, companies you've probably never heard of. They typically trade below $5. A lot of these companies trade below $1 with regards to share price. They're very, very volatile, very, very risky. So there's I guess the point I'm trying to make is there's lots of different stocks, and there are a lot of different qualities of stocks. One end being blue chip stocks, the best stocks on the stock market. And the other end being so-called penny stocks or stocks that are very, very risky. You could essentially lose your money overnight. Blue chip stocks, you can lose money, but over the long term, you're probably okay. You're probably safe unless there's a company that is in dire straits. But for the most part, if you just pick a random blue chip company, you'll probably be fine over the long term. If you pick a random penny stock company, you could lose all your money overnight. So just kind of wanted to make that distinction as well. Not all stocks on the stock market are traded or considered equal. And the third thing is trading strategy. If you're looking to double or triple your money overnight, Robinhood, the stock market, is probably not for you. You probably want to go to a casino because that's really the only way you're going to be doing that. And yes, you can do some penny stock trading. You can make a lot of money very quickly, but I would consider that equivalent to gambling. You really have no idea what the stock is going to be doing. You're throwing your money in and trying to double your money overnight. So, having said all that, what would I do? What would I advise new investors with zero experience on the stock market to do? Well, I would simply invest in some exchange-traded funds called ETFs, funds that basically just track an underlying index. And let's scroll all the way to the bottom here. These are some stocks that I have been watching here. And I actually have an E-Trade account. I also have a Vanguard account where I have this stock as the predominant stock in my portfolio. VOO. This is a Vanguard stock, a very low expense stock. So essentially there's really not a lot of fees associated with holding this stock. So you're basically buying one stock here, but you're really buying, I think, about 75 different stocks, all blue chip stocks that are automatically selected for you. And this is a great way for new investors to start off. These stocks are very, very safe. They basically track what the overall S&P 500 is doing. And if you think the S&P 500 is over the long term is going to continue to increase, these are perfect investments for you. You really don't have to think about what different types of stocks, individual stocks to buy and sell. These have a collection of stocks. They're very safe. And over the long term, you can't really go wrong by buying these particular stocks. And over the long term, what you can do is put money into these on a regular basis. Every month, put in, for example, $250, buy one share of the stock. Every month, on a regular basis, you buy this. This is called dollar cost averaging. You simply buy over and over and over again. And over the long term, you'll build capital in this particular stock. And over the long term, it should appreciate as well. You can see over the last 5 years, it's up 104.65%, meaning that if you had bought this stock 5 years ago, kept it, you're essentially doubled your money in 5 years. So again, this isn't doubling your money overnight. This is doubling your money over the long term. Over the last year here, you can see it's up 20%. So again, very, very good return on money. But again, you're not going to be doubling your money overnight. In contrast, you can take a look at something like this, a DCHC. This is a penny stock. You can see it's trading for 29 cents. Over the last week here, you can see it's up 386%. So if you were to have put money into this particular stock, you would have made a lot of money over a very short amount of time. But unfortunately, these penny stocks are very, very volatile. These penny stocks can come crashing down at any moment. You can see over the last year here, this stock is down 93%. So if you know something that other investors don't know, inside information, yeah, you can make some money off penny stocks. But over the long term, it's very difficult to make a very nice return over penny stock trading. It's very, very difficult. So especially with investors who have zero experience on the market. Again, I'm talking about investors who have literally zero experience buying and selling stocks. They've never had a brokerage account, even with one of the larger brokerage accounts like E-Trade or Vanguard. Basically, investors trying to throw some money into the markets, learn about investing with zero experience. I definitely would buy an ETF like VOO here. Dollar cost average that. If you can't afford VOO, you can get something like VIG. There's a lot of different index funds out there. You can simply Google S&P 500 index funds, and you can see a lot of these companies are very, very large as well. 24.81 billion. I shouldn't say company, I should say stock are very large, because again, these are essentially conglomerations of other stocks. These are a collection of other stocks off the stock market. So you don't really have to go in and select individual securities. You buy this one stock and you are set. You basically have a well-diversified portfolio of different stocks on the stock market. So again, this is what I would be doing as a new investor with zero experience on the stock market. I would first understand that there's a lot of risk involved on the stock market. You can lose all your money overnight if you do not know what you're doing. Not all stocks are created equal, especially penny stocks. I would definitely stay away from penny stocks as a new investor. Once you get more knowledge about the markets, once you learn how to buy and sell stocks and have a lot of confidence in doing that, then you can jump into some penny stocks and kind of test out that market. But to start off with, I would not be doing that. I'd be doing large cap ETFs like VOO here. And again, the trading strategy would be a buy and hold strategy starting off. Maybe buy and sell some smaller price stocks. Learn how to really evaluate stocks. Learn how to buy and sell stocks efficiently. And then once you learn all of those, then you can start doing what I'm doing and investing in individual securities. Again, from typically blue chip companies, but there's lots of different ways of investing on the stock market, lots of different investment strategies. But to start off, I would do large cap or very large market capitalization ETFs that have a broad underlying index of S&P 500 blue chip stocks, like an S&P 500 index fund. I would do a buy and hold strategy to start off with a little bit of buying and selling of individual stocks, learn how that's done. But I would not be buying lots of different penny stocks. I would not be trying to buy and sell, trying to day and swing trade on a weekly basis. I would do buy and hold ETFs, learn how to trade stocks, learn how to evaluate stocks, and then after you get experience, then start diving into buying and selling individual securities, maybe even some more of the risky stuff like day trading penny stocks. So just kind of wanted to do a quick video. I know there's been a lot of comments, a lot of questions regarding, hey, I'm a new investor, what should I dive into? I don't have a lot of trading experience. So I just wanted to kind of put out a cautionary video, trying to help you guys out with regards to what you should be doing. I would not be doing penny stocks. I would not be trying to do day and swing trades until you really understand what the markets are all about. I would definitely try to find a very good index fund, S&P 500 index fund, a very large market cap fund like VOO, 200 billion plus with regards to the stock holdings, and then do a little bit more of a buy and hold strategy. Buy some stock, hold it for a little bit longer term. And then if you want to do some buying and selling of individual securities, just pick something like this, something that's $40, $50, buy and sell a couple of shares, learn how to do all the different market orders. And then once you have some experience, once you have some knowledge, then dive in and try to do some day swing trading, dividend capture, real estate investment trusts, business development companies. There's a whole host of different ways to trade the market. So yeah, just wanted to put out a quick video talking about what new investors with zero experience should be doing on Robinhood. So yeah, kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. I want to thank you guys for the support. If you guys haven't signed up for the Amazon giveaway, do that. There will be a link in the video description below. At 10,000 subscribers, we'll be doing that video. And again, if you guys have any good comments, any other things for new investors I did not mention, put them in the comment threads down below, and we can discuss those in the comment threads. And if there's enough good suggestions, I'll do another update video regarding all of your guys' comments. So again, new investors, know that the market is risky, know how to evaluate stocks before trying to do some day and swing trades, and really just avoid day trading penny stocks starting off with. Later on, you can kind of dabble in that, but don't put all your money into penny stocks and lose it overnight. There's been a few investors on the channel, new viewers on the channel, who have mentioned that they have lost quite a bit of money starting off because they really had no idea what they're doing. So just try to avoid that, and that's kind of the purpose behind this video. So yeah, kind of with that, I'll end the video, and we'll see you guys next time.